Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello, Ufado Victor. I'll see you later. I'm not Nick, unfortunately. I think Nick's back on Monday. So you stuck with me for now, and then there is some more guests after my segment. To start the day, we have the stock markets down, except the Nikkei. We've got the DAX 40 down almost 1%, NASDAQ down 0.1%. We've got the FTSE down just under 1%. We've got US 30 or Dow Jones down 0.15%, and the S&P down just under 0.2%. So stock market's not looking too hot after the rate cut to end the week. So yeah, that's that. The dollar is doing okay. It's holding up somehow. So we did obviously have positive data for the dollar yesterday. However, in my eyes, it's outweighed quite heavily by the 50 basis point cut. And the markets are still digesting that as far as I can see. Still looking for a break of this very strong key level. So if we look on the weekly time frame, you can see we've got this really, really nice level throughout here, just above the 100. So I'm looking for a break below there for maybe a long-term target to around $90. But yeah, we'll see if that happens. I'm not getting too ahead of myself yet. Lee James, thank you very much. It's UK Nick. I'll take that. London session was good on gold. Yes, the gold market has been rocketing recently, obviously driven mainly by the rate cut we saw on Wednesday. So still no pullback on gold, unfortunately, but if you are sort of a breakout trader, you could have caught this move quite nicely. This was how much? Let's see. Yeah, 1% move on gold. Not bad for a quick sort of scalp or day trade, really. In terms of open positions, we have got quite a few, actually. So I'm long on the pound dollar. And I'm not going to tell you why. I want you guys to tell me why I might be long on pound dollar. It's quite simple. There's nothing complex behind it. But anyone that pays attention to the recent news in terms of central banks, you'll probably get it. Oil, also in oil, more in a technical aspect, but also, again, because of the US rate cuts, quite positive in that area. We are long on silver. We're still short on the dollar Mexican peso and also short on dollar yen. So we did see a huge spike up this morning, and that was due to the Bank of Japan essentially not looking too hot. So obviously we did see a spike to the upside. However, still looking to continue this move to the downside. So I scaled in essentially right at the peak up here. Or well, I should say what I hope is the peak, because my entry so far has been quite accurate. So we'll see how this one moves for the next week or so. James, can you give some risk management advice? Yes, risk 1 to 2% per trade. If you're going into multiple trades on the same asset, so for example, if you're going long pound dollar, euro dollar, and shorting dollar yen, similar to what I'm in, then you might want to reduce risk because you've got large exposure to the US dollar and you're trading it both ways. So you need to be very cautious in that sense. But yeah, generally just don't be an idiot. Trading is a business. Regardless of your capital amount, you will never be a large capital trader if you can't manage to approach it as a business first. So for example, if I give you $100 account or $1 million account, you'll approach it the same way if you don't have that sort of professional mindset. When you say the market is still digesting 50 basis point cut, why is that? So what you'll see when we get news, especially large news, so whether it's it could be a FOMC or what's it called, NFP, it's not a case of people get straight into the market. You'll see obviously a lot of volatility, but then there's people that still want to get into positions based on that 50 basis point cut. So what we might see is larger moves on the dollar. Can't find my arrow. Let me, here we go. So we might still see the dollar move to the upside and then move to the downside whilst people are trying to get into sell positions, and then it's sort of digested, and that's when it starts moving to the downside. Essentially, I mean, it's a bit more complex than that, but that's the rough idea. Abdul got it right. The reason I am long pound dollar is the central bank divergence. So at the moment, still relatively break even, in actually slight drawdown after some profit. But I placed it this morning, so that's fine. But yes, we had obviously quite an aggressive cut from the Fed, and the Bank of England held at 5%. So we got the divergence there. Are we selling gold? We're absolutely not selling gold. Can we look at GJ? Yes, we can look at GJ. Here. So yeah, I mean, GJ actually looks quite nice here. So what we see is, like I said, we've got the Bank of England holding rates. So that's positive for the pound. We also had news come out from the Bank of Japan saying they're essentially not in a rush to start hiking rates. So essentially, we've had quite a nice move on pound yen to the upside. However, that still isn't going to change the larger landscape of this market, in my opinion. We've also got to pay attention to this, where price is rejecting this 200 daily moving average. If we can close above where we are now, essentially, that's great, but we still also have this level of resistance throughout here. So you've got two technical factors standing in the way of a long position. We also have, again, the larger landscape of this market. So technically, I'd be looking to potentially short where we are now. Now, I'm not going to, and I'm not saying you should. However, I would rather go short here rather than trying to go long. Already sold gold. I mean, that's fine. However, selling gold for me definitely isn't something I'd want to do, just according to my strategy and my rules. But it doesn't matter. If you can make money doing the opposite of me, that's also completely fine. Please tell me when gold go down to 25.75. I think gold will go down to 25.75 in exactly 3 days, 2 hours, and 5 minutes. Can you share analysis on dollar CAD? Yeah, we can take a look at dollar CAD. There was news for the Canadian dollar. I've seen it pop up, but I've not really paid attention because I'm not involved with the Canadian dollar at the moment. Yesterday, we went over this market, and I was saying that we were rejecting this 200 moving average on the daily. We've also got quite a strong level of structure throughout here. So you can see resistance turned support, now acting as resistance again, also again bouncing off the 200. So technically very similar to GJ, pound yen, in terms of we've got quite a lot of technical factors standing in the way of a long position here. We also have the Fed cuts. So would you really want to go long? In my opinion, no. However, I'm also not really a fan of the CAD, so I don't really want to go short. If you're looking to short the dollar, there's better assets to do that on, or better currencies, rather than the Canadian dollar. I'm not sure exactly when Nick's back. I think it's probably Monday, from what I understand, but I'm not sure. Oil. I'm in on oil, Laura. I don't think it's doing too well at the moment. It's currently in some drawdown, but that's completely fine. This was more of a technical play. I'm also looking at getting a trade on Bitcoin, but this would be an intraday trade. So what I do on my segments here, I go over a lot of the economics and a lot of the sort of swing trading aspects, but I don't really cover my day trading things. And it's normally because day trading, it's more simple and it doesn't give me as much to talk about. And it's, to be honest, probably a bit more boring because the way I trade technicals My MetaTrader is frozen. That's great. But the way I trade technicals when I'm day trading, it's very mechanical, and there's not that much in terms of economics I account for. So, for example, like the pound dollar trade I showed you, it was just as simple as central bank divergence. There's not a case of looking at huge landscapes and trying to do long-term forecasts. It's a case of, okay, well, there's a slight divergence, price is bouncing here, looks good, I'm going to go in for a buy and maybe close out for 1% at the end of the day or 2%. So the reason I'm looking to buy Bitcoin is we've got the 50 moving average, which is the green, and the 200 moving average, which is red. We've got these in a bullish fan. Now we opened above the pivot point, which is this gray line right here where you see PP. And essentially there's lots of statistics behind these pivot points. So this is what I mean by it's very mechanical and it's a little bit boring. So for example, let's say price dropped down to S3. I know statistically there's a 90% chance that this level will get rejected and it won't close. The market won't hold below S3. And if it does, it's not likely the market won't close below S3 or likely won't close below S3. And the same with R3 that's off the screen right now. So when we have price open above this gray line, which it has done, we've got a 65% chance that the market will close above the pivot points. So you can see it's very, very basic. There's not much here. And we just buy off levels of structure. So you can see I've got these blue lines marked up at this very small level of what was resistance and now acting as support. So just looking to buy off there for a, 1 to 2% profit. Long-term target on Bitcoin is 70,000. But again, I don't really trade Bitcoin or crypto in general. You could ask me a lot of questions about crypto, I wouldn't be able to answer. So it's purely just a technical trade. Anyway, we'll move on from there. Russell. Yes, so I'm still watching the Russell for a long position. The problem is we're kind of stuck at this level of resistance. I would like to see a pullback to around this fib level. So what we've got here again is these moving averages. So we've got the 200 and the 50. They've changed from bearish to bullish. So I'm looking for some sort of entry within this zone. And then a stop loss just below, possibly around here, and then take profit at this fib extension. So again, a very simple trade, but whether we can get the entry or not, I don't know. I think this market is due for a pullback just by looking at it. And again, that's not really based on much, more just experience, I guess. But yeah, if we can get this pullback, I'll definitely take the trade. For anyone that doesn't know, the reason the Russell looks so appealing right now is because we've had the 50 basis point cuts, and rate cuts are quite positive for the Russell because it's made up of small cap or smaller companies that do well from lower interest rates. You told us last time I'll refer us to your economic couch. I'm not sure what you mean by that, Abdul. Sorry. Leo trade or L30 trade. We've already covered dollar CAD. Feel free to rewind like 5-10 minutes. You'll see it there. Nasdaq also again looking for a pullback here. Now I'm not really thinking we're going to get this pullback to the 50% level, just because I don't think there's enough steam in this market to move almost 4% to the downside. I just don't see that happening. So rather than using the fib, I'm looking at this level of support. And again, we've got these two moving averages here that kind of back this up, that can act quite nicely as dynamic support and resistance in this case, and then just trade it back up into sort of the 26,000 level to the previous high. So nothing complex, just using sort of the momentum and the rate cuts as confluence and looking for a technical entry. Dollar Swiss. Let's see. Let's see what's on the Edge Finder just before we continue too far. So we've got CAD Swiss bearish, we've got silver, platinum, Russell, Swiss yen, Euro yen, USD ZAR, we've got the Dow, copper, Euro CAD, and dollar CAD, all reading as bullish, which is interesting. So actually, what I said earlier about dollar CAD may be completely wrong, but that's just my outlook. So dollar Swiss, seasonally and historically, it's actually very bullish at this period. However, the problem is the dollar, in my view, doesn't have enough factors behind it to really drive it. Yeah, I guess not. There's not enough there to drive it in terms of a swing trade. You might be able to get some sort of day trade or scalp here. But in my opinion, after we've had the rate cuts, we've also got the elections coming, which may see some inflow into risk-off assets such as the Swiss. This market looks more favorable to the downside. So really, I'd need to see a break of the support, retest, and a continuation to the downside, and then maybe short from here, something like that. Can you refer to me as your economic couch? I won't be doing that, unfortunately. I'm sorry. The markets today are looking quite interesting. The yen, again, as I said earlier, we had some pretty dovish news from the Bank of Japan. So we are seeing some downside on the yen. The euro is looking a little bit flat today, and the pound or the sterling is still moving to the upside, which is quite nice. We've got a little divergence between the pound and the euro. However, it's nothing too big. The dollar is seeing some upside, which I don't like. I'd like to see the dollar continue to move down. So we'll see. New Zealand dollar Swiss. I actually don't trade the New Zealand dollar Swiss, to be honest. So I'll give you a technical outlook. Actually, let me check something here quickly. New Zealand's economic outlook is less optimistic, which could weigh on the New Zealand dollar. A long position New Zealand dollar doesn't seem like it's in a great place, to be quite honest. And the Swiss also is viewed as overvalued. However, the SNB, which is Swiss National Bank, looks like it's going to tolerate it for the short term. So yeah, I guess I'd really be going in for shorts here, even though technically it doesn't look too great to go short. So I won't be taking this. Although I think, in shorts compared to longs look a lot more promising, I guess. You don't get my question. No, Abdul, I'm sorry. I don't get your question. Can you refer to me to your economic couch? I'm not sure what an economic couch is. Anyway, let's get back on topic. Let me see if there's anything else that I need to cover. Gold, we've already covered. I'm still looking for shorts on the euro pound. So we've got relatively weak data for the euro. And obviously, as I've been saying, we've got the the BOE, so the Bank of England holding rates at 5%. So already a little bit of a divergence there with the European Central Bank and the Bank of England. We also have general weaker economic data out of the Eurozone. Germany's data is not being too convincing. So overall, this market looks good to go short. I'm just really struggling to find an entry here. So really, I'd like to see, as always, this 50% move. But similarly to the other market, is there enough in this market in terms of drivers to push almost 1.5% to the upside? I'm not sure. So what we need to also do, or what I'm doing, is looking maybe for this break and retest of support, and might start looking for something more like this. But yeah, at the moment, there's no way to get in. What else is the AUD CAD? Yeah, may look to get into the Australian dollar CAD, although I think the Australian dollar also doesn't have that much in favor of it. We've had weak data out of China, and obviously the Australian dollar also relies heavily on commodity prices. which aren't doing too hot either at the moment. Thoughts on dollar yen? Yes, I'm in dollar yen to the short side. So you can see it here. So actually, I'll show you the research behind this trade so you can see. Here, so this is from one of my traders at Elite Traders. We've got short on USD JPY. Is driven by confluence of macroeconomic factors that signal further downside risk on the pair. The recent actions from the Fed, particularly the 50 basis point rate cut, underscores a shift towards a more dovish stance. Despite despite Chair Powell's efforts to temper market expectations, the ongoing revisions to the Fed's dot plot, with additional rate cuts forecasted, reflect weakening U.S. economic outlook. This adds to the narrative of a softening dollar, particularly as we approach the U.S. election period. Excuse me, I'm not going to read all of this, actually. Feel free to screenshot it if you want to. But yeah, the market generally looks quite good to go short. You see the technical outlook here as well. We continue to make these lower highs. So yeah, generally speaking, it doesn't look the best to be going short, really. One second. Okay, cool. Thoughts on Euro New Zealand? Yeah, let's take a look at Euro New Zealand. I'm just having a look. Again, this isn't really a market I pay attention to. I guess the daily time frame looks quite nice for a long position. So what we've got is this bounce off the 200, wick to the downside, rejection, and it looks like today's daily candle is showing quite strong bullish momentum. So what we're going to do is just have a quick look at our economic sheet here and see if this is something we could do. So we've got the European Central Bank's expected rate cut and data-dependent approach underscores the current challenges facing the Eurozone economy. With growth forecasts downgraded and inflation remaining a concern, the ECB's cautious stance aims to navigate weak industrial activity and the overall economic slowdown. It doesn't sound great. What about the New Zealand? The New Zealand dollar continues to be influenced by global risk sentiment, with recent pressures primarily stemming from weaker global demand and economic challenges faced by key trading partners. So it seems like if we bought this market, it would really be trading a weak currency against a weak currency. Although when I say weak currency, we're not speaking in relation to the New Zealand dollar. So I actually might take a stab at going long here, possibly on Monday. So if we can get a nice bullish daily close here, the weekly stays bullish as well, with the 200 moving average still below price. The H4 doesn't look too convincing. So yeah, maybe on Monday, I might take a long position here at low risk and see how it goes. Sorry, could you please take a look at gold again? Missed the beginning. Yeah, we can go back to gold. Got quite a bit of time today. So gold, the drivers behind gold are still very bullish. There's nothing, in my view, for gold to really change its trend or change the course. The only thing that really is a bit of a weight for me is a potential profit-taking dip. Now, I've been speaking about this quite a lot. And what we've seen, whenever we've made a new all-time high, we've seen quite aggressive moves to the downside as we do see people closing out positions. Now, that's not really a huge, alarm. It's not a case of, oh, gold's going to crash or gold's going to dump. It's more just, when are we going to see that? We've not seen it recently for a while. So we created new all-time highs on the 20th of August. And we've tested this level of all-time highs for a while, then broke above and created a new all-time high. And we've still not seen this move to the downside for people to get out of the positions. So I'm just waiting for that to happen. It might not happen. It's not guaranteed that that will happen. But I would love to see a move down to this previous level and use this as resistance and move to the upside. As we saw back here, again, this resistance was caused at all-time highs. We broke above and retested and moved to the upside. So I'm just looking for that pattern to repeat. And if we can get that, I'll look to execute. I think Fridays are hard trading days. Fridays are a bit tough, and it's not your fault, really. The reason Fridays are hard, and even Mondays can be quite difficult, is because Fridays you normally see profit taking, and you will see a lot more price action moves that aren't necessarily driven by economics. It's more market participants that are trying to either get out of positions for the week or maybe opening new positions for the week ahead. So it can be a little bit more irrational than you would expect. Can you show the monthly time frame? Yes, of course. So this is actually, I forgot to say, but this is also a little bit of a problem in my eyes, is the distance that we have between the 200 moving average. So we are almost 25% above, which is a large amount. So last time we had something like this, we were 28% above the 200 moving average, and it took 2 years essentially to get back and, well, I'm going to say correct, but it's not actually a price correction, but to get back and sort of revert or have a mean reversion, if you will. So it's not a case of, oh, we're really far above the 200 moving average, price is going to crash down to retest it. It's not a case of that. It's more just something to pay attention to. What you don't want to do is be bullish on gold. As we've been bullish on gold this whole year, you don't want to still be bullish on gold when we have something that changes. Whether that could be, there's a lot of inflowing gold into gold due to the election. So when the elections are over, that's a factor that may affect gold. We'll see less of a risk-off move there. If things in the Middle East start to relax, if Russia-Ukraine starts to relax, and we see the global tensions lowering, we see the risk-off appeal of gold start to deteriorate a little bit, that could be a sign that you need to get out of gold. But of course, you need to be able to pay attention to understand that that's happening. You don't want to sit here and listen to me say it's bullish, and then 6 months down the line, you're still saying it's bullish, even though it might not be. James, do you think Fridays are hard to trade than others? To be honest, no. And that's just because generally I'm a swing trader. So it doesn't matter really. I don't open positions on Fridays really, unless it's a day trade. And if it's a day trade, that I just follow the rules. And again, I'm very mechanical. I rely on statistics. And the statistics haven't shown me that I underperform on Fridays. Why do people place trades on Fridays versus those that close trades on Fridays? What's the idea behind placing a trade when the market is about to close? Because to a scalper or a day trader, opening a position on Friday might not make much sense. But a lot of institutions aren't doing that. What you've got to do is look at what they're looking at. So let's say you're an institution with, let's say you've allocated 10 million or 50 million. 50 million is more sort of reasonable amount to a trade idea. Let's say that your trading floor and the analysts are bearish or bullish, whatever. What you might do is get into a position when you see the ideal criteria met. Bearing in mind, a lot of institutions, if they're trading the economics, they don't really look at price action. They'll look at a general overview, but they won't pay attention to sort of the highs and lows and all that sort of stuff. It's more just, is price a good place to buy? So they might enter on a Friday, it doesn't really matter. Then they might enter again on Wednesday if price comes up here, and they'll essentially do what we call dollar cost averaging, and they'll do what we, is called sort of position building. And that's kind of just the way it works. Now, it's not all the time. I'm not saying that is how every institutional trade works, but that's essentially why they might open a trade on Friday. Do you believe gold will bounce up by the end of the day? Sorry if you already answered this question. I'm not sure, to be honest. As I said, I am expecting a dip on gold as we see some profit taking. And we have so far seen quite a strong rejection to the upside on gold. So maybe it's the start of that. I don't know. But I wouldn't be looking to buy gold now. It's too high. And I don't like the way that the market looks right now. This, like I said, we've had quite a strong rejection to the upside, and now we're printing to the downside. And overall, this market is very extended. So yeah, I'd be looking more for a pullback. Speaking of which, let's check on some open positions. Dollar yen not doing too much, which is fine. Mexican peso looking a little bit ugly, but that's fine. Silver's moving to the downside, which I don't like. Oil drawdown and pound dollar drawdown. Yeah, we're having a bit of a flip towards the end of the day. Sashank, I think is that. Oil, I'm bullish on oil. Mainly because we've had the rate cuts, which are quite positive for oil. Technical factors for this trade that I took were in play as well. So I was basically just trading the rate cuts along with some basic technicals. So yeah, I'm starting a buy position. But if you're not in a position like this, I wouldn't recommend opening one. As I said, opening positions on Friday, unless you've got a very solid reason to, it's not really the best thing to do. Silver, overall, I think silver's still got some room to the upside. Similar thing with gold. It's more just because silver's not as risky as gold right now. As I said, gold's at all-time highs. And in my view, it's at risk of some profit taking, whereas silver isn't quite in the same boat. So I'm looking to target roughly the previous highs at the 35 level. But yeah, generally speaking, the trend of this market is to the upside. We've seen quite nice price movements here. We've seen the lower low. Then we've created a higher high, now a higher low, and now we possibly just gone and created a new higher high. So yeah, we'll see how this works, but we are buying into a daily resistance here. So just keep that in mind. Yeah, silver isn't as extended as gold, in my opinion. Euro Australian about to cross on the weekly. I'm not sure what you mean by cross, but the daily looks interesting. So I was looking to short. I'm actually not interested in this position anymore. Get rid of all this. But what we've got here is a nice rejection of this 200 daily moving average. And you guys are probably sick of hearing me say that, but it's quite a core part of my strategy. So if you look previously on this market, rejection of the moving average, rejection over here, we came down and consolidated quite heavily, but it's a good confluence to use for general direction. So you can see here was a really nice example. And again, down here, so it's something worth looking at. I know a lot of people don't like moving averages. They say it's very retail or whatever you want to say, but who cares? It works, so why not use it? So yeah, we've just seen this rejection again. But, I've already said I'm not too keen on going bullish on the euro or the Australian dollar. But in this market, I think I'd be more favoring a trade to the long side as we've just had this rejection. I'd created a higher low. So I'd have a stop possibly here, take profit at the previous high around the 1.68, and this will be the trade. Gold major. Anton, can you elaborate a little bit? I'm not sure what you mean. So let's have a look at some of the Edge Finder stuff. Let's see what's going on here. COT data. Gold still very, very bullish. Silver, pound, US dollar, yen. It'll be interesting to see when this updates next week to see how the positioning changes after the rate cut. Because this is, I think it gets updated every Thursday. Is it Tuesday or Thursday? If it's Thursday, then this will be accounting for the rate cut, so never mind. But if it's, I think it's published on Tuesday. Sorry, I think it's filled out on Tuesday and then published on Thursday, I think. I can't remember actually. Anyway, CAD bearish, Swiss bearish, Bitcoin bearish, slightly. Interesting. Retail positioning. Let's have a look. Oil is very bullish actually in retail. A lot of the commodities are, as well as the Russell. DAX and the S&P are bearish. Interesting. Normally what we see actually is when retail are buying one of the things, so whether it be the S&P or selling the S&P, they do the same thing with the NASDAQ and the DAX. But it doesn't seem like that's the case today, which is interesting. What's your sweet spot in number of trades taken per week? I don't really have a sweet spot, to be quite honest. I'll trade what's there. You know, my goal is to make money, and as long as the market looks like I can make some money from it, then I'll be in. But I don't like to overexpose on one thing. So, for example, if I've got a lot of setups involving the dollar to the long side, I might take two of them and half risk, so split risk between both of those positions. So yeah. Trading volume gold much higher than silver? Yes, it is, absolutely. So dollar card, euro card, copper, Dow. Just thinking if it's interesting actually. Some of the yen pairs are popping up. Let's have a look at euro yen. I've not seen the yen pairs on here for a while, which is interesting. However, I actually might look to go short. So let's see. Let's have some planning here. So the fib doesn't really fit in this situation, so we'll ignore the fib. But what we've got is lower highs. We've got the 200 moving average. So what that does is this creates two situations that I'm interested in. This could become the third lower high, or we could come up, retest this 200 moving average, and then possibly head to the downside. Now, I'm not saying this is the only situation. I mean, it could just rocket to the upside and I'll look like a bit of a fool. However, I am not really thinking that that's going to happen. I don't think the yen is that bearish anymore. I used to think we'd correct a lot of this move that we saw when we had the hawkish BOJ and the unwinding of carry trades. However, I'm not really in that mindset anymore. So I've changed my bias on the yen a little bit. Monthly percent gain average isn't, I think it's 2.7% over the past 5 years. It's averaged 2.7%. BTC long. Yes, I'm looking at going long on Bitcoin. Just not quite there yet. I'd like to see a bullish candle close. So let's see. Also, I'm not really sure. I don't think I'm going to open a trade now because it's 3 p.m. For me anyway. I don't want to hold a day trade over the weekend. Maybe Monday I'll look to buy, but I've kind of missed the opportunity now. UJ only now performer. Focus on UJ. Yes, I'm in UJ. Although it seems like it's a little bit bullish, more bullish than I would like anyway. I'd like to at least see it come back to the previous lows around here at 140. But yeah, we'll see if that happens. It doesn't really matter what I want. So you can see I've got one position here. This was the initial execution. And then we had the run to the upside. So I scaled in. And maybe that was a mistake. We'll see. Could pay off nicely. Who knows? But yeah, I don't have an issue scaling into losing trades. I know a big rule that I see flying around a lot is don't add into losing trades. And while I agree, if you don't know how to manage risk, it can be a detrimental thing. Generally speaking, it's not always a bad idea, especially if the trade idea, like the thesis behind the trade, is solid. Doesn't always make a bad decision. Can we buy oil here? I don't know. If your buy button works, then yeah, I'm sure you can. It's always funny getting these comments of, can we buy this? Should we buy that? Or should we sell? So I don't know. Will BTC go to 70K? We can look, but again, I've said this before, I'm not a crypto trader. Quite happy to take some day trades based on technicals, but generally speaking, I don't really have any understanding of crypto. So let me have a look from a technical aspect first, and then we can see. I suppose the big thing here is this daily resistance, or this double top that we've got. I do like that we are above the 200 moving average here. That's quite a nice sign for me. But it's a case of really, how does price react off here? If the daily candle closes bearish off this double top, it wouldn't surprise me if you see a continuation to maybe retest this area of consolidation, and then we move to the upside. I know that drawing's probably not very clear, but there you go. Do you think NAS 100 is overbought? I mean, yes, really. A lot of the indices are overvalued. So let me see if I've got the research here. I can't find it, but yeah, there's a lot of releases by some institutions saying that they are viewing the S&P and NASDAQ as overvalued, which I don't necessarily disagree with. There was a article, I think it was investing.com put an article out the other day saying that the JP Morgan clients have been shorting the S&P for quite some time. And obviously they wouldn't do that unless they knew something. So I'm not saying that we're going to see a crash or we're going to see huge downside moves, but it's something that I am staying aware of. Generally speaking, I don't go short on the stock market, or the indices, I should say. But if we do start seeing convincing signs, I might take a stab. But at the moment, we've just bounced off the 200 daily moving average, or roughly bounced off, created a higher low. So we'll see. Actually, this could be quite interesting to see if the daily can break this level that we've got here. If we can break above, I think we've got a relatively clear run to at least go back to the previous high. If we can't, so let's say that we get rejections off this level, the next thing to really watch is, do we create a lower low or do we create a higher low? So do we create something like this, or do we come further down and do that? And, no matter what happens now, I look like a genius, but, I can't really say if it's going to go up or down. My overall idea is NASDAQ is bullish. But yeah, it's just a case of, am I right or not? We'll see. Can you show us your P&L for the last 6 months? No. Equities get capitalized. Yes. How about Hang Seng Index? Price action looking promising. I've got no idea. Well, this guy's a genius. He's going up or down. Exactly. And this is the problem with the markets. So, I can sit here and draw this up, and I'll post it on Twitter, and then I'll delete one of the lines when one of these situations happens, and I'll charge a course at $1,000 and say you predict the markets on a daily time frame, make 10,000 pips. US stock markets capitalize. Yeah. So let's have a look. Let me just have a quick think. So we've got, let me just see what the news is for next week. Actually, I've not checked that. Next week. Okay, so we've got, let's see if there's anything interesting here. Manufacturing PMI on Monday. Global services PMI as well. Other than that, there's not too much. New home sales, but doesn't matter. We've got the S&B rate interest decision. Likely will be a cut. You can see the forecast here is 1% rather than 1.25, so we could expect a 25 basis point cut. GDP quarter on quarter. We've got jobless claims. We've also got a speech by Powell. But yeah, relatively quiet week next week. We've got a lot of news for the dollar, but other than the dollar, not much. But you are teaching this stuff. I feel sorry for the audience. That's completely fine. I'm not giving signals. I'm not telling people on live to go and buy NASDAQ or anything. I'm sat here doing some analysis for people. So yeah, Black Boy, don't watch if you don't like me. That's completely fine. JP speech on Thursday. Was it not Friday? Did I get that wrong? Yes, JP speech on Thursday. So let's have a think. I can't remember what time I've got. So 10. So until 10:15, let me just work out what time that is for me before I start anything too long. Okay, so I've got 15 minutes. That's fine. So in terms of research, I sent this out yesterday in the chat. There is not much. In fact, there's no change. I've not updated this. So if you guys want this, what I'll do is I'll just give it in the chat again. Anyone that was here yesterday, you should still be logged in. Let me just find the password. So this is completely free. The link should be in the chat at some point. There you go. But yeah, this is research, so you can go and read this. It's by institutions. So let's just have a look together on what the global situations are. So global growth continues to slow with weak economic data from China, the Eurozone and the UK weighing on the market sentiment. Trade tensions and geopolitical risks, particularly in Europe and Asia, add to market uncertainties. Despite slowing wage growth, persistent inflation in the US and Europe is causing central banks to proceed cautiously in their monetary policy adjustments. Regional economic challenges such as China's weak domestic demand and Germany's industrial slowdown further complicate the global economic outlook. Geopolitical events, including the US presidential election and OPEC's influence on energy markets, are expected to continue driving market volatility. So actually nothing surprising there. So weak economic data from China, we can refer that to the AUD. I'm not sure many retail traders actually trade the CNY, which is the Chinese currency. Eurozone and the UK weighing on market sentiment, relatively negative data out for both, so that makes sense. But yeah, that's about it. I think the next big thing, so what a lot of the market was doing was focusing on the Fed cuts. That was the big narrative for the US for the past, well, since July, really. And now we've had the Fed cuts. The next big thing in focus is the elections. So that's kind of where your focus needs to be. We do also have FOMC also in November. So we'll see if we get another rate cut then, which I think we will. So we'll see. Is there any market impact for the US? Barker Hughes oil rig. To be honest, I've not seen that. Let's see. I don't think so. We've got oil inventories on Wednesday. Why are some traders against moving their stop loss to break even once the trade goes into profit to neutralize risk and re-enter the trade if it goes more drawdown at a better price? because depending on what type of trader you are, moving your stop to break even and getting stopped at break even and re-entering things, it can really mess up your statistics. So for example, when I was back testing my intraday strategy, I didn't do anything. I let the trades run till stop or till take profit. And I have a very clear idea of what my results could be over the next 10 years. But if I start micromanaging trades, that completely sways what those results were. And this is a big thing in backtesting. People think it's the holy grail. And while it is great, you've got multiple factors. So you've got things like, for example, in backtesting, you could risk 2% on one trade, then risk 1% on another trade because you have a feeling, oh, it looks great. But in real, wrong way around. You can risk 1% per trade on backtesting. And then in real life, when you're really trading, you can say, oh, but this one looks a bit more convincing than all the others. It looks too good to be true. I'm going to risk 2%. Then you're down an extra percent that you would be. You've also got like micromanaging. As I just said, you might back test without doing anything, without moving your stops, and just wait till stop or take profit. And then when you're live trading, you start closing too early, you start micromanaging, you start doing other things, taking partials. That sways the result. And then in the end, retail traders, or I keep saying retail traders, but I mean, generally speaking, you will have something like, oh, my back testing works fine. I've got like a 60% hit rate. I can make 30% a year, but I'm down on my live account. Why is that? And it's because you don't account for all these small changes at the time. They don't feel like they're going to do anything or change much. But when you do them over and over and over and over again, eventually your results will be completely different. And that's why backtesting can be a godsend, but it can also be very, very dangerous because it can give you a fake sense of security if you're not disciplined enough to follow your backtest. So let me have a think. I'm just trying to see. So there's Euro NOK. Let's have a look there. So that's one of the trade ideas on the research sheet. So we'll see if we can find something that might align. So it's suggesting Euro NOK long. In fact, I won't read it. You've got the link. You can go and check it if you want. So let's have a look. Where could we maybe get in on this market? Suppose we've got lower low, higher low. So we've got already trend, well, general trend to the upside. We've got the moving averages that actually look quite bearish right now. However, the daily's bullish. We've got 200 moving average underneath price. We've got, I suppose, this level of sort of resistance through here. So we might be able to get some sort of intraday or a short-term swing trade, something along these lines, and then maybe at a push we get a 1 to 2. But of course, you know, we need to see how the market closes. We need to see how Monday opens or Sunday night opens. But yeah, I don't think a long position really is a bad idea in this market. It's just not super clear in terms of technicals. There's no obvious setup here, which is a little bit unfortunate. So yeah. Open trades, let's see. I've got 2 minutes left, so we can check what my positions are doing, and then I think the next guest is on. Pound dollar in drawdown, that's completely fine. We've got oil also in drawdown, but it's still hovering around this level of support, so that's also fine. I'm quite happy to hold this one. We've got silver also not looking too hot. It's quite frustrating, I want to say. These positions were all in profit this morning, and then they seem to have just flipped. So what I'm going to do, I think, after the stream is close out of this scaling at break even and let the initial position run. Yeah, okay. So I think that's it. Let me see who the next guest is for you guys. So on next, we have Chris. So he's probably in the back room waiting. So what I'm going to do is say goodbye to you guys. I hope you all have a great weekend. Thank you for being here. Been a great chat as always. So yeah, don't full margin. Hope you all stay safe. Have a good weekend. I will probably see you guys next week. See you later.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Friday. Welcome back to A1 Trading. I was just looking up, if everybody knows this today, we have triple witching for today, which means we have stock expirations, index expirations, and index futures expirations all happening today. And you'd think the market would care, but what I'm seeing price action wise today is it cares a little bit, not a ton. Come here. The golden boy coming to hang out with y'all today. So we had a slight gap lower today. I am looking for price to possibly find 564 on the SPY. If it wasn't Friday, I would be interested in a trade for a couple of days out. Like I don't really love going long option 0 DTE, although the market is behaving to the downside, and I could see us just kind of slowly drifting a bit lower. Where this close from Wednesday and this huge gap up just gets faded a little bit. But if we come down to this level, is that enough to spark a rally back up to these highs? I don't know. But I've already made some good trades this week, had a decent amount of profit roll in. I'm kind of on coast mode to wrap up the day. There are some other trades I want to look at. I want to get some futures trades in both directions. One thing I think we see poor performance in triple witching weeks. So you have triple witching March, June, September, and December, and that's when you have these alignments. It's usually the third Friday of every of these months where you have all those expirations coming at the same time. The average return is not great. The market may be down, but we actually started with a slight gap lower anyway. So the market actually gapped down right around the triple witching averages, which is around 0.5%. So this close from yesterday to the open so far and pushing lower slightly, we're down about 0.74% on the day, which actually might seem like, oh my gosh, is the market like, pooping its pants today because we're down in red for the first time since this big CPI flip we had on the 11th. So here's what I'm pretty mindful of right now. Where we are trading here, where we're trading right here is, let me change the color. This is an interesting spot because just based on price action, FOMC lows and the post FOMC breakout highs, I could see price actually hanging out in here because that's a pretty big range, by the way. If you think about those levels, how many points is that on the S&P? If we go from this close to that that close, that's a 9.73 point move. So almost 10 points on the SPY. That's a big move. That's 1.73%. And if we go from the FOMC close to the FOMC high or post FOMC high, that's over 2%. So I am going to do this. I'm going to put in a little tiny horizontal line there and off the FOMC low horizontal line there, because to me, I'm looking to see, where price wants to go. If we break below the FOMC low, I think there's room to the downside to come back and have some volatility. Maybe make a higher low, maybe come back to that CPI swing and that whatever that September, that post Labor Day sell-off low was, or we stay in here for a while and maybe there's not a lot of decision, and I could see that happening too. Even though we're wrapping up the quarter on the 30th, we're wrapping up our final week of trading next week on Friday the 27th. But if price doesn't want to go anywhere, okay, fine. There's ways to take advantage of that. I think that the market kind of showed that it got all excited, but that might be fading a little bit. I don't know if the Bears are necessarily coming back in to take over. They probably won't. There's a good landscape right now to see that the market's still relatively excited for this renewed growth and this renewed expansion that's still there with now more accommodative central banks. So it's not that the Fed is necessarily easing, but the Fed is normalizing. Okay. But normalizing in a what was pretty obvious through July was a softer economy, or things were looking like they're turning softer. We still have employment data to get through. And this is what's going to be interesting with good news is good news, bad news is bad news. With the next round of employment data, is the US going to see, better non-farm payroll numbers? Are they going to see lower? In fact, unemployment claims this week were down like 10,000, right? What was yesterday's unemployment claims? Yesterday's unemployment claims, 230 came in 219. So the market got a little excited that, in addition to the push up all night with futures, and we had the post Fed move. So not too bad, right? So that's a good sign that like unemployment claims are getting lower. Now we come out with non-farm payroll on the 4th. Then we'll see if the non-farm number is good. If it is, then all of a sudden, hey, this labor stuff is looking a little bit better, and unemployment claims coming down, and maybe the unemployment rate stays the same. It doesn't pop up any higher where the SOM rule is activated. So, but I will say the big winner for all this has been gold, silver, and Bitcoin. If you've been watching those charts, things are still ripping higher. So I want to talk about those today. So Lee says, how often does triple witching occur? It's March, June, September, December, only 4 times a year. And so that chart that I pulled up here had the last 14 triple witchings going back to 2017 and 2021. And so the average performance has been down about 0.3% or 0.5%. So most of them have turned negative. But what I thought was interesting was the standard deviation is about 3.04%, which is about a third higher than average. So if you have other expiration weeks, you've got the non-expiration weeks 2.17, other expiration weeks 2.12, but triple witching, you get about a 25 to 30% increase in volatility. So I mean, and look, volatility doesn't necessarily mean direction. We could have volatility do something like this: down, oops. You could have price go down and up and down. That's volatility, right? But if it's down, up, and down, and we finish here, the market's down 0.5% in red, and that just throws in the statistic of how many times we're tracking triple witching and what the performance is overall. But the market might just be giving back a little bit today. So yeah, I mean it's just another day, but there's $5.1 trillion of expirations today. So I thought maybe it means something, right? So your S&P by day during triple witching since 2021. The number of returns, you've got 14 triple witching since 2021. The average return on the Friday with all these expirations like we have today is negative 0.52. The median return is actually worse than that at negative 0.68, and the percent positive 14%. So we're looking at most of the time, triple witching's a negative day. Doesn't mean it has to be like a horrible thing, but it means, today's a down day. And so far we're actually proving that we're already down, 0.6, 0.7%. Okay. So I thought that was interesting. All right. Let's take a look at some charts. Yep. So S&P, I'm going to box these in just because we did make all-time highs again in the S&P. We're sitting right in between the FOMC low and the breakout high post FOMC. I wouldn't be surprised if price uses this as the more intermediate structure, right? So if the market fails to break higher, fails to break lower, we deal with some indecision here. But if and when we do break higher, lower, I think there's going to be some momentum behind it. And I don't know which direction, of course, but whatever happens, I want to be, long, and I want to be short, and I'm going to take some stabs at the downside with some inexpensive hedges, and I'll be long to the upside just for this positive drift and see if we can, in fact, hit a 585 or a 590 or maybe even 600 before the end of the year. Okay. It just depends if the market feels like front running the election, or if the market still has to wait for reality like, hey, we should wait and see if data comes in positive. Because if it does, then maybe that's the catalyst the market needs, right? It would be easier to justify, and it doesn't have to happen, right? The market can be irrational a long time, but it doesn't have to wait for employment news to hit. The market should be like, you know what? Everything's great. The Fed is cutting rates. All central banks are cutting rates right now, except for the BOJ. But look what happened to the Japanese yen overnight. Japanese yen was super weak overnight because they didn't do anything with rates. So if you looked at the currency strength chart, Japanese yen was the only outlier that was clearly moving and moving weaker in a big way. Now, I said I didn't take the trade. I didn't post any alerts on this, but I did say that I was expecting JPY to get weaker. It did deliver. I just want nothing to do with the Japanese yen. I was considering that trade on the 6J, which is the Japanese yen futures trade, just doing a bear call spread. That would have been really nice to have it expire today and pay out for some profit, but I didn't take the trade. Anyway, if anybody traded the yen, it was weaker. That was the likely direction, just because technically the dollar yen hit those divergent levels, and not too bad. Okay, so S&P right here, kind of in between the post breakout and FOMC low. If we go to the Nasdaq, I'm not going to box it in the same way because the Nasdaq is up here towards these highs. Actually, you know what? I will. I don't want to make my chart super messy, but that is the post FOMC, and this is the FOMC low right there. And I don't need to keep these blue arrows. That was for my trade alert for the 471.50 kind of center price on the Qs. We got all the way up to 486 yesterday, and I believe my long side is a 474. Let me confirm that. 474. Let's go here. Qs. Oh, where are you? There it is. So my long side is 473. Right now, this is trading for 11.74 with my break even at $11.50. So I want to see a little bit more price one way or the other. If we break the highs, great. If we come back down to the lows, okay, fine. But I want to see a breakout one way or the other. And I've given myself time. I'm looking to see over the next 2 weeks. This is out to an October 4th expiration. So through next week, the 27th, and through the following week, the 4th, is the market able to do at least a 1 week daily or a 1 week average, which is around $19. I need this thing to move 11.50 for me to make money, right? So anything over 11.50, I'm protecting profit. But we have an average weekly trading range around 19 bucks, and so hopefully somewhere we get a $19 to $20 directional move, and I can grab some nice profit. But I'm just going to go ahead and box in that FOMC low plus the breakout. There's clearly momentum some way. I mean, if the Qs can break higher, this is a gap that'd be filled, but we also have all-time highs. The SPY has notched several all-time highs. The Dow has notched several all-time highs. The NASDAQ is always one of the best, indexes to recover. It gets beat up the fastest, but it recovers the fastest too. There's more volatility, but the NASDAQ for the last 20, 30 years has been the best performing index in the US by far. It doesn't come without pain. I mean, we've had 30, 40, 50% drawdowns, but it also tends to recover and then go way, way higher because it's all tech. And tech typically has better margins, better growth, better momentum. And although it's volatile, a lot of traders make a lot of good profits on the Qs for those returns. I just think it's important to watch your your risk because it can be uglier. Yeah. Okay, so I'm just going to watch that on the NASDAQ. If we do break this post FOMC high, there's a gap fill that could potentially be right up here towards 493 or even 496, which I'd be watching those pretty carefully. That would be right around that $19 to $20 move. If we go to the downside, I'm looking at this post Labor Day sell-off move right around 450. We will see what happens. But until proven otherwise, price right now is in between, right? Because if we think about this resistance, this sell-off that just broke this high, this market might use this. Check this out. If we have a high, and this market's going to use this as some type of reversal pattern, this might just do this. Consolidate here and then go higher. So if we have some consolidation on the right side of this trend line, or it comes back to the trend line and maybe uses it to get down to these lows, I like this area as a buy zone to get long. So if we come back to this Labor Day sell-off low, I'm going to take a stab at the NASDAQ. And if we come back down to the August 5th bottom, I'm definitely taking stabs, plural, at the NASDAQ. But if we just accumulate in here, I think we're going to have to wait for price to give us a catalyst to break out higher. And if it does that, we could be breaking out, making all-time highs yet again on the Qs, all-time highs again, the SPY, the Dow. The Russell might still play catch up, but we'll see. Okay, that's my NASDAQ. Let's go to the Dow. So we had a FOMC, push back down to the lows. We broke up and had that huge gap to the upside plus all-time highs. We're sitting right in the middle. Here's my Dow. There's my post FOMC high. There's my FOMC low. I'm going to tighten that up just a little bit. FOMC low and post FOMC high. So I just want to watch that as a potential indecision. Now on the DIA, you can see that I have resistance here and resistance here, and we hit resistance on the Dow. Part of me actually wonders, you know what? I'm going to take a look at a trade right now. I'm going to put in a bear call spread over the weekend on the Dow. Let me see if I can take a look at this one. So if I go to the, what, dude? There's not a 23 expiration on the DIA? What the fudge? So I have to go out the next Friday. Man, I was hoping I could take a trade for Monday. Let me do this on the, maybe I'll do this on the Qs. If we have 486, let me see what like a 487 QQQ trade looks like. QQQ, September 23, 487, sell. So I get 14 cents on that trade. I could probably do this with an NDX, maybe make a little bit more profit on this one. So NDX right here, 19960. Let me see if I can get like a 20. I'm going to go 20,000 for a Monday expiration. NDX, Monday is the 23rd, 20,000. 10 points wide, get a $1.50. I'm going to go after an income trade there. So probability profits are on 80%. Maybe what I will do is, this is a trade for Monday. Is price capable of working its way higher today? Usually Mondays and Tuesdays start off on a rough note. Let me see if I can get filled. Let me get filled for like $3. Okay, I'm going to put this as a pending order in the Discord for my my portion of the A1 Trading Discord in the signal and the alerts. I'm going to put this trade in. So I'm going to go after $3, try to get filled today, which I may not get filled. I would have to settle for $1.50, but I don't feel like risking 50 to get $1.50, even though I think the probability is decent. Monday will probably start off on, maybe a rougher note. Usually Mondays, Tuesdays are making lows for the week, and then we rally the rest of the week in an up week. So I will set this up for, let's see, or let me see if I can go 5 points wide in the SPX and do the same thing. SPX is a little bit tighter above the post FOMC high, 57.36. Let me see what that pays. All right, I'm going to debate between the SPX and NDX. So if I went Monday and the high around 57, I'll go like 57.50. 57.50. So that's an 89% probability. That's an 11 delta. Go 5 wide, get 50 cents. I want to go for a $5 spread. I'm going to try to get $1 for this one. So 1 divided by 5 is a 20% premium. I think $1.50 is what I'm looking for. Yep. I'm going to take this trade, 50-cent credit. Don't love it. Probability is about the same. I'm going to go after $1.50 on this one and set this trade up. So I'm going to go after $1.50 risk for $3.50, or $3.50 risk for $1.50 reward, and set this one up. Let's go $1.50 pending in. Okay, and then similar there. I need about 45 seconds to get these in the accounts. Similar. $1.50 is okay. There we go. There we go. Okay. So that is a 57.50 by 57.55. So just above that high right there. Oops. And there is my picture. Anything down here is profit. and it's a 9/23 expiration. 57.50. Sell call. 57.55. Buy call. $1.50 credit pending. Okay, so if price comes up today to fill that, I'm going to take a stab at that for Monday and see if we just edge a little bit lower for Monday. If price goes down today, likely this isn't going to fill. I might cancel this by the end of the day, but I'll make that update in the Telegram channel. Okay, let's do, here is the trade. This is going to be an index trade. So SPX 9/23 expiration. I'm just typing this in the A1 alert section right now. 57.50 sell call. 57.55 buy call. $1.50 credit pending. So setting up bear call spread above the post Fed rally Thursday. Looking to see if triple witching plus Monday will offer a slight drift lower for Monday income. All right, I'll take a screenshot of this. And thanks for letting me do all this while I get it updated in real time. And post my little disclaimer. Okay, and if that's not filled today, then I'll update. I might cancel the trade by the end of the day, depending on where we are. If price is going to do this, here's how I know I'd get filled on the trade. If price rallies back up, to fill the gap from the close yesterday or rallies back up towards the highs again, I'm likely getting filled for that $1.50. And I'm looking to see if the market fades by the end of the day or starts to, move a little bit lower on Monday. Okay, so there's risk in the trade, but I'm trying to get about 30 cents or 30% of the premium, which for a credit spread is pretty standard. Okay, all right. Let's move on. Let's move down the list. I want to go to the Russell for a moment. So the IWM, this one, I mean, we could kind of box in the same thing. If I look at the FOMC low, which is right there, move that over actually. And the the whole high, the FOMC low and high is still, it's incorporating 3 days of trading now. There's still some room. Take a look at the IWM. There's still some room to get to the highs, right? Taking out these highs, still not at all-time highs, which is all the way up towards like 245. But if there's room to, make a break for it, get a pullback, there's kind of a midpoint rolling through this thing. And what we still see here in the Russell is we're making higher high. This might be a new trend that starts. I'm going to keep an eye on this to kind of, buy some levels, add some more option trades on IWM. If we end up using this level of support, higher low, let's say we head up here and use this as, if it's going to like respect this resistance, but if it blows this top off, then I'm all about that momentum to the upside to try to get to 245. So I'm going to be watching the Russell carefully. I do have levels I want to buy. I might end up, moving these up if price looks like it is in fact just moving higher. Okay, VIX, we're at 1601. Even with the FOMC, even with triple witching, VIX is still relatively calm. Certainly not down to 12, but in the teens, 15, 16. I'd say low to moderate volatility. Low to moderate. We're not doing anything crazy. SPXY, I'm still long in this one. The dollar index. Did the dollar index do anything convincing? How many of you were looking at the dollar index like I'm going to be long or short? All I see is a bunch of noise. This is another one that I think we should keep a close eye on. If we make a fresh break below the FOMC low, then there's some follow through. If we make a breakout above the FOMC high or even this level, this is the recovery / the squeeze. If everyone's short the dollar, Forex is notorious for those little contrarian plays. So if the dollar's oversold, the contrarian side of it is everyone's trying to sell the dollar. Everyone's, net short or whatever the dollar. And I mean, you can look at your Edge Finder commitment of traders to see if who look. Let's look at that actually. Let's see. Let's look at COT for the euro dollar. Because if the retail side is still net short the euro dollar, that means the euro dollar should probably track higher. So let's go sentiment COD data. So we are looking at the dollar right now is, I'm seeing net longs on the dollar. Let me look at the percentage change. So the dollar actually flipped to a positive stance, not by 3.53%. Yeah, it's like 73% long dollar, 27% short dollar. Let's go smart money indicator. So right now we're showing that retail positioning is short euro dollar. So that means euro dollar is probably going longer. Well, I mean, this is fine. I would like to see this. We clearly have some noise. I'd like to see a little bit more chop in here. Okay. And just see if the dollar can make a breakout. If all this is a big bear flag, right? If we have a big bear flag, something like that, I mean, I just don't be fooled by like some type of fake out here, because that's probably a manipulation move, and then the market sells back off. I'm pretty keen on selling rallies on the dollar. If we come back to this level here looking for some resistance, we come back to this halfway point looking for some resistance, I would be watching for turns. I'm not just going to sell those levels necessarily. I'd be looking for aggressive turns and confirmation on any type of visual alignment system you have. Look for some trends to confirm going bearish again. My least favorite trade is going to be this. That's my least favorite trade, because we're already at the lows. I don't want to sell lower. But if we have a break, pause, and then we pull back, I mean, that's fine to look for a sell there, because this is structure lows. So if we have a break, pause, and it pulls back, I'd like to sell that level and then look for lower lows. And I have said this for months. If the dollar gets weaker, everything else looks really good to go up. Gold, silver, Bitcoin, stocks, everything looks good to go up. Respective currencies, sure. But man, the indexes I think can go really nicely, even irrationally higher with a weaker dollar if we actually get that move. And it's right there. I mean, this dollar is, I mean, you could say it's kind of on the brink. Like if this dollar gets weaker and takes out this summer 2023 low, there's not much stopping the dollar to the downside. The last major structure that we had was way the heck down here at 90. I mean, that you talk about a sweep pattern, high to low, lower high to lower low, hit some symmetry around 94, and then any type of pullback here, and then another push lower for a fifth wave, dollar could come all the way back to 90. So I'm not interested in buying the dollar at all unless price proves that we're going to actually flip around. But I don't see that right now. If we're going to see risk appetite, the dollar is likely not getting stronger. Okay, that's a big trade-off. Any questions on that? All right. Oil is at 70.82. We've come a nice ways off these lows. Obviously, we sold off about 20+% on oil, but we have responded with about an 8, almost 9% rally to the upside. Again, it's not ripping by any means, but this support level and structure is holding. So I'm long on oil, and I'm going to stick with that for right now. CL is what I'm trading. That's my trade right there, 65.5 by 64.5 for 50 cents. Let me see what that's trading for right now, actually. We go to CL. And I got in for about 50 cents. If it's up like 50% right now, if I'm trading it like a 25 debit, I might just take the profit and use that capital efficiency elsewhere. So let's go to CL. 65 by 55. That is a naked put hedge. This one is the 65.50. What up, Frank? How are you, man?
Pretty good. How are you?
Good. Let me check this one. Oh boy, decisions. Oh, I can make 250 bucks right there. I think I'm going to take the trade and not worry about the potential outlier risk. This was a trade out to November. I think I'm just going to take the profit right now. So I've got a 65 by 45, or I'm sorry, 65.5 by 64.5. I'm going to take this trade off as long as I can close out for 25 cents. That should give me $250 of profit. Okay, not filling. Let me go 26 cents. The ask is 27. Come on, 26. Fill to 26 cents. All right, I'm going to take this trade off right now. This is an update in my alert section as well. This is under futures. So if I go to the top here, I'm going to update this one with a, where the heck is it? Let me update this one with a reply. So let me reply /CL.
What are you taking for 26 cents?
I'm taking profit. I had a 50 cent. I've had a 50 cent credit instead of waiting for the next 3 months to give me profit. I'm just going to take the 50% profit right now and be done with it. Bull put spread. 50 cents credit. Now showing 25 to 26 cents debit. I'm closing for 50%. Take profit and moving on. Okay, so let me throw that in my reply. Taking that trade off. All right, so now I'm going to do the same thing in these accounts. Frank, what do you got for me today? What are you going to make me trade today?
Right.
Just kidding.
Kind of looking at, sorry, I didn't hear you. What'd you say?
Oh, I just said, what are you going to make me trade today?
Oh, I'm looking at the SPX as always.
Okay.
I'm thinking today, maybe towards the end of the day, we're going to get a flush lower, because that's when all the options contracts expire, futures contracts expire.
Yep.
So, maybe we could get some good, I guess, like credit spreads down there if we want to look at selling puts over the weekend, selling bull put spreads. I think you'll get more premium because it's over the weekend, and you'll get, if we do get a hard move, then you could be in a good spot. I don't know, but I think if you take a bull put spread on a last minute flush on the market, and you're looking for tomorrow's expiration, I think maybe that could be a trade. So I'm kind of debating on that. Right now, we haven't really moved anywhere. We kind of opened up at 5,700. We're still kind of around that zone. So I'm wondering if even the triple witching is going to do anything, or if we're just going to hover around break even. But, I'm not sure if I'm going to be looking for like a huge sell-off.
Mm-hmm.
But yeah, every analyst is super bullish right now. So I don't necessarily think we could look for any, shorts on the market other than,
I think
what we've seen already.
Yeah. So you had mentioned bull put spreads. I'm not doing that right now. I am looking at, so price is right here. Here's our FOMC low. There's our post FOMC high from yesterday. I could see price staying inside of this. I could see triple witching being a bit of a non-event. I put in a trade. I haven't gotten filled yet, but I did an SPX trade where I'm doing a bear call spread up here because I'm looking to see if triple witching will actually, stay where it is, struggle to take out the highs from Thursday, but just work our way down. Like one thing that might, again, this is random, but all the anticipation is triple witching today. But what would be the big like middle finger to all traders out there would be like, we don't move at all today, and then Monday is like this weird, aggressively directional day. In fact, that was like the first week of trading on a Tuesday. This was this sell-off was a Monday. One of the some of these like bigger directional days have been Mondays, which have been a little bit more surprising to me because usually Mondays are fairly quiet.
Yeah.
But anyway.
I don't know. You're saying there's gonna be massive order flows, right, towards the end of the day, just because everyone's got to get out.
Arguably, I mean, triple witching can also be. It's average about 0.5%. It's already moved 0.5%. So there might be some scrambling late in the day. I've got a gamma level around 564 on the SPY, which would push us down another $3. That doesn't fill the gap from FOMC lows. That's just kind of right here in the middle. That's about the only thing I see on the radar that would be like, okay, if we go down a little bit this for today, I can see that level being tested. That's about it.
Okay.
But I'm not taking a 0 DT down to it. It's like, I mean, I took a trade this morning and it was perfect. Like little SPX trade there, made some money, and that was it. And the market's actually been quite cooperative for the last couple of hours, or I guess about an hour and 20 minutes into open. So yeah,
I'm also thinking if we got that today, we're probably kind of limited on upside. So I'm wondering if we're just going to stay where we're at or move lower. I'm looking at 57.10, 57.15. I think that's trading at like let me see the credit.
Okay, you're going tighter than me. I just put on a trade here. I did a 57.50 by 57.55. It's trading for about 50 cents right now. I put in a pending order for $1.50 to see if price were to come up at all today. If price were to come up at all today and fail at that high, that should get me filled at $1.50, and then see if it fades, and then maybe has like kind of a gap fill, like indecision day for Monday. So that's what I put on. Is I went up higher than you're talking. You're talking about not quite above the Thursday high. You're talking a little bit tighter. Say 57.10.
No, not 730s or 40s, but 710 to 15, because that's where we opened up at. Yeah, we opened up at 710.
Are you talking about today then? You wanted to trade for just today?
Yeah.
Okay, I was going for a Monday trade, not today.
I'm thinking that it's probably going to be price action to the upside is probably going to be limited.
Yeah.
Just for the day. Yeah. And if we do get that flush lower, it will look really nice.
We're right here, man.
Premium side.
So this is something to watch for today on SPX. If we hold, this is the gap higher pullback, and then the rip for the remainder of the day that melt up yesterday. We're right back down to the same low. If somehow price actually breaks that low, there could be some unwinding, because that's an open gap right there for the SPX and the SPY. Everything gapped up big yesterday. So if we break that lows around 56.90 to 56.85, if we see a nice confirmation below that, there could be just a little unwinding to the downside. So my only concern with your 57.10 there, Frank, is that's pretty tight to price. Like right there is saying that it doesn't come up and even test today's candle at all. Right? It's just tight. That's all. I mean, it's fine. But if we were to, I mean, I don't know. You could be spot on, dude. I mean, if you call that, I'll cheer it on. But I'm putting my trade up here. 57.40, 57.50. I want to be out of the way. So that's my style.
I mean, I'm trying to think, why would we end up higher today? With what's going on? Like, why would we end green today?
I don't know. Why did we end up 2.5 to 3% higher after a Fed crash on Wednesday? Like the market clearly was noisy and manipulative, and then it just ripped up on Thursday. It's like, I didn't expect that. So market definitely does things I don't expect. Yeah, I mean, the market does whatever it wants, but I mean, why would we end up higher? Because the market's still optimistic, and structure-wise, this is a low, and the market bids it again. So we find a way to claw back, and we stay. Look, we stay like maybe this is a whole thing of like you get a 0.25% pullback, 0.5% pullback, and the market's like, good enough, buy the rip or buy the dip, So I don't know. I'm so like skeptical on just the blow off top. But I mean, looking at the S&P, connecting some dots here, if we have resistance, it's very possible. Resistance, there's still room to rip. But do we pull back first to fill a gap? Do we have a higher low in here that gets started before we go higher? I don't know. Do we come back and retest the Labor Day sell-off lows? I don't know. But this is a structure I'd be watching. Where would I get long? I'm going to buy the S&P here, and I'm going to buy the S&P here. That's it. I want to wait for those opportunities. Like, I'd love to do like a 5 or 10 contract trade at these levels, because I think that's a good spot to be buying and seeing the market hold, and then seeing some good support in the market. But I'm not doing anything massive here. It's like I'm just taking stabs. Like, And as we're talking right now, the last few minutes, look where we are. And we're right back down to that low. Like that's getting a little bit more aggressive here the last 15 minutes of trading, but that's going to be the critical spot. Can we break that low at 56.86 and close below it? Because if we can, now there's room for a gap to look like we have the ability to fill it. It may not fill it today. I mean, that'd be crazy if it does, but if we do fill it today, then freaking sweet, I guess. It just means I won't get my SPX trade filled at the top. But if we bounce here, we just stay sideways and triple witching becomes kind of a bit of a non-event. That's why I'm a little skeptical for Monday because who knows? Monday could be like a weird directional day when it's like, yeah, we just waited for triple witching to fake everybody out, and then all the real order flows come in on Monday. You know,
Okay.
it's
So
anybody's
you're
game,
thinking
dude.
that if it's a non-event, price doesn't really move today, you're thinking tomorrow or Monday could be a heavy
Yeah.
swing lower.
I think Monday could
Okay.
be one of those days. Like typically, like Mondays are usually the low of the week. Like Mondays, Tuesdays are usually like sideways calm days or pullbacks, and then the market spends the rest of the week pulling back. So if we start off on rough footing, let's just look at a week. So we go Monday, and let's say the market is flat or down, and then you've got Tuesday to kind of stabilize, Wednesday to help correct, Thursday and Friday to try to get back up and to salvage a green week. I mean, I would be curious to see. I mean, I know historically you've got about 54% of days are bullish. I'm curious how many weeks, if we have how many weeks are bullish percentage wise. I'd like to actually I don't know. Can Chat GPT give me that? How many weeks a year does the S&P finish positive? 56.1 chance of closing any given week positively. By the way, out of 2871 weeks, there are 2 weeks where the S&P closed entirely unchanged, 1965 and 1977. So just on a weekly average, I mean, I'm not saying that's a crazy edge for traders, but 54% chance of a daily bullish move and 56% chance of a weekly bullish move. I mean, that's why if you have any pullbacks on Mondays and Tuesdays, you're really getting a chance to buy lows and then see if the market just recovers a little bit. So I don't know. It's not a bad play. Yeah. I mean,
I like
the
that.
market's
So if
shrugged
we
off
get a
pretty much
rip
everything for
lower,
90 years. So
say
what'd you say?
we get a flush lower either today or Monday.
Okay.
Let's say it's Monday. Would
Okay.
you be taking like a bull put spread there?
So if you're saying if we had a flush down for Monday,
Yeah.
is that what you're saying? If we have a flush down Monday, I'm probably not taking a bull put spread there. If we get a flush down Monday, I'm probably looking to see, does this market actually go somewhere like this, where we have a bit of a fake out trade? You know, you and I talked about like a broadening pattern. I'm just trying to make some sense of like where would this broadening pattern be? I think this structure, this is why I kept it on my chart, because if I'm connecting highs, connecting lows, I mean, if this is going to be an interim top, do we fill this gap in the Fed? If there's momentum to that, do we come back down and try to revisit this Labor Day sell-off? Because if we do that, I'm not going to do a bull put spread at this FOMC low. I'm going to do a bull put spread at the Labor Day low, and then maybe this August 5th low. So I'll get there and there as far as I would take this and hold it to expiration, looking to see if the market goes up. I think those are pretty good opportunities to me, at least to establish some credit spreads.
I like that too.
Yeah, it's not bad.
I think,
what is anybody
I don't
just
know.
clacking away at gold and silver? I mean, gold's up again, all-time highs. Awesome. Like
I
it's
keep wanting to get in
seems like
gold,
easiest
and
trade in the world, but
it won't slow down.
yeah. What are you
Can't
doing on
chase
gold
it
to
up
try to
here.
participate? Anything?
I'm just trying to buy GLD.
Okay. Yeah, I mean, I'm definitely not buying all-time highs, that's for sure. But I mean, I've got let's see, about $6,500 of profit on GC for futures. My Baidu trade looks like I'm gonna take an assignment today on Baidu, that 90 by I think it's 90 by 70. I'm taking an assignment there. I'm gonna repair Baidu. I'm willing to take some ownership there. GLD, I still own it. I'm up 10 grand. I wish I owned a lot more of it, but what makes up for my little, to me, kind of a baby position in GLD, that's where my SLV is much bigger, like 37K and SLV, trying to go after hopefully double that. I'm hoping I can get like 60, 70 grand out of SLV. And then GLD, if I get a pullback, great. But I'm trading a lot of futures just to generate the income along with the direction. SLV is a combination of credit spreads, naked puts, own shares. I've got it covered up to 35, which is above my first measure move at 33. So I'm sticking with those. Like, I like them a lot. I'm kind of, I don't know. And maybe I'm like putting too much emphasis on silver, but I just hate buying gold at all-time highs. And at this stage, since we've made,
That's fair.
1, 2, 3, 4, I mean, we've made 5 all-time highs in the last 2 weeks of trading. And I mean, a pullback here would be fine, but maybe that's all we get. I mean, I want to see something, I guess, a little bit better to offer up. Like, just give us a better pullback, would you? So I don't know, but if the
I
dollar
think we're going to
is
get a minor pullback.
yeah, but is the minor pullback going to be dollar related? That's what I'm debating. Is like the dollar's choppy. The dollar's at those multi-year lows right now. I could see the dollar, getting stronger in the near term just because it's a bit oversold and overextended. And I can see gold. I mean, we saw that reaction on Wednesday too. Gold dropped as the dollar, I don't want to say pop because that's annoying to rhyme, but the dollar did jump up on Wednesday after. If I could go back to the currency strength chart, we saw the dollar immediately get flushed down. And then by the end of the day, the dollar was back up. It gave back all those the weakness. So that was where gold was indecisive. But then Thursday, Friday, gold's like, yeah, we're still going. We're here. So anyway, I mean, dollar short term could give us a pullback on gold, but I don't know, man. I mean, I guess the good thing is if you're long gold, just keep moving stop losses. At this point, like if you don't get a pullback, I'm probably not buying much the all-time highs, but I'm just going to wait. I mean, I've got some credit spreads in here. I'd like to see a pullback so I can put. Here's why I want a pullback, because even if I don't buy more gold, what I could do is a pullback. Let's say a pullback to here. I could go far enough down to then place a credit spread. And that way I can get out of the way, but that little sell-off can increase the IV, increase the premiums that I can sell. And I can say, look, I'll sell it lower and I'll still get paid a decent credit if it doesn't get assigned, but I could also, manage my GLT position a little bit better. So that's why I want to sell off, is I want to sell premiums with some type of sell-off or pullback so I can space it out properly. I hate doing this. I hate doing a bull put spread, here or here, and the market pulls back. I'd rather see a pullback first, then do my bull put spread and try to space it out so that has a lot of room to go up and generate the income.
Yeah.
Okay. So
Like
here
that.
is where we're at. We're getting a nice little break below yesterday's. I mean, you call that yesterday's low, but that's obviously intermediate because we had the gap higher, the pullback intraday. But if we continue to push lower, so far for the day from close yesterday to now, I want to say we're pushing close to maybe 0.8% lower. It's not so the SPY shows 0.8% lower. Let's go SPX. So from the close yesterday to current price, we're about 0.5% down on the SPX. On the S&P, a little bit more pronounced. So there's about 0.82% to the downside. It's currently showing 0.83, so it's right there. Interesting. Everything's down today. So Thursday's little rip and melt up, finish on a high note, but today's giving it back a little bit. Qs are down 0.7, Dow 0.5, Russell down 0.68. SPY's actually down the most of all the indexes, which is pretty interesting. Gold is still up on the day. Silver still up on the day. Bitcoin's all the way back up towards 60 and change. Here is 64,000. Well, I've been watching Bitcoin for that type of trade. I'd like to see a pullback still. Maybe a little accumulation here in Bitcoin could be where I look at a bull position. Risk appetite on everything could be also favoring Bitcoin. End of the year run would be pretty fantastic for, I'm sure, a lot of enthusiastic bulls in Bitcoin. I don't know if it's there yet, but
I have a plan on Bitcoin.
What are you doing?
So I have one on Bitcoin and Ethereum. They're debit spreads, vertical plays, I guess. So I bought a call at the money at the time, it was at $20, which so far this trade has not been like doing much for me. But I bought a call at 20, sold a call at 29 on BITO. And wait, let me share my screen real quick.
Okay.
This is going out to, I think it's March. Yeah, March 31st of next year. I have a 20 by 20 something. I paid $1.80 for it. And that I think it's a 9-point move. Yeah, 20 to 29. And this is for March. So if we come back up here by the end of the year or beginning of next year, it would be a great trade. But so far, I mean, I've had this for, I think, since the summertime. So,
yeah,
you know, I'm still at like, the option itself is worth, let's see, I think it's worth like 140. It's worth 122 right now. I paid 180 for it.
Okay. I have mostly January expirations. I've got a $20 naked put, and I've got $23 long calls. I own some shares of BITO. The one thing I've been disappointed with on BITO is it's not correlating the same as Bitcoin. If you compare, let me take this chart here. Let's do an overlay. BTC. So let's just overlay the chart and then compare that to MSTR, which is MicroStrategy. Compare that to IBIT, which is the BlackRock ETF. Okay, these are all fudged up now. Darn it. Let me get rid of
I know it's not very correlated, but
it's just pricing out weird, that's all.
Correlated. Yeah, it might underperform, but I mean, if Bitcoin, let's see, if Bitcoin goes back up to 70,000,
I'd love it to get to 33. Yeah, no, I do like the trade. That's huge upside potential, man.
It's also got an incredible dividend, which is a really bad sign. It's got a 56% dividend.
I know. I would trust that 0%.
And it's already come down this year as much as its dividend pays.
Has it really? So what? That's wild.
It's come down 50%.
Wow.
And it pays a 56% dividend.
Yeah, well, I think I'm probably going to cap my BITO exposure. The reason I got into it in the first place, I mean, I had a good run. Like I was long calls and doing some credit spreads when we had that rip from 14 to 30. But the pullback here that I started to dollar cost average into, I'm trading if I'm doing one ETF, which I am. I'm trading BITO. I still have some exposure there, but I'm trading IBIT with the BlackRock ETF just because it looks a lot like Bitcoin. Like here's IBIT. It obviously doesn't have all the data that Bitcoin does, but it's been behaving with the same type of choppy accumulation like Bitcoin right there. So to me, I like that when I just spot check it. It looks the same as Bitcoin, just a different price. So I kind of trust that one a little bit more. Like if Bitcoin were to go back up to 74, possibly make a fresh break, I would believe that IBIT is going to make that similar type of run. So that's the one that I'm actually willing to kind of throw in some. What's that?
Can you do options on IBIT?
Not on IBIT. Nope, not yet.
You're just owning it?
I just own it. Yep. I haven't done any options because they're not available. But that's why I did BITO, because you can trade options. But when it's not trading the same way or correlating the same way, I'm not putting the same type of like passive dollar cost averaging into it. So I still have exposure. I mean, you can see I have shares and everything, but IBIT is a little different animal. So I have some shares there, and I'm just dollar cost averaging in. That's all.
Gotcha.
So there's some portfolio Bitcoin plays.
Well, so today on the S&P, we broke lower from yesterday's, I guess, intraday low.
Yep.
We're ignoring pre-market moves.
A little bit. We're right there. Just a little bit lower.
Do you think after this, if we did break, we can confirm or help confirm that we're going to move lower? Or is this a time to be, I guess, looking at it to come all the way back to break even like it usually does?
Like I said, I'm not really super bullish. I'm not bearish, but I'm not super bullish. So my point is this: if we go down to fill the FOMC low and that close on Wednesday, this is not where I see the market buying the dip. That's just me. I'm not interested in buying the dip right here. How many? What would that be, Frank? Like, we're buying the dip at a 2% off of all-time highs when we have had a 10% dip and a 5 or 6% dip and a 2% dip. I'm not buying that. I'm not buying the low. I mean, I'll look at it this way, dude. If this goes higher and higher and higher and higher, I will make money on my entire portfolio. I have profits in ES that can still run. I have profits in NQ that can still run. I have profits in MES and MNQ. So with my futures trades, I'm still long on all these in addition to taking the stabs at the downside. So on top of that, all the other positions with positive drift, this should give like the broader market up. Like, I mean, yesterday, I don't know if this was yesterday close, but we had like 78% of the stock market advancing. It was a very healthy broad market. It was mostly led by Mag 7. I think I didn't take a screenshot of it, but if you looked at the heat map from yesterday, it was like bright green Nvidia, bright green Apple, Amazon, Meta, Tesla, like everything was bright green. But we still had some, I think energy was down a little bit or whatever. Financials pulled back a little bit or defenses pulled back, something like that. But dude,
Yeah.
I can't justify just buying. Like, I'm not jonesing to buy. Like, I know the Fed just cut rates, but I believe that the market needs more than just the Fed to rip higher. I think the market needs another supportive round of data that's going to come in the coming weeks. Earnings season is going to be a good earnings would be steady and solid, and earnings might actually overshadow it. Like, earnings could overshadow softer employment news, and earnings could overshadow even inflation. Like, earnings could be strong enough to be like, who cares? Everybody's making money. Corporate profits are great. Rip higher. And the U.S. is like, they'll figure it out because the Fed's cutting. It's going to get better. Like, the market can just think whatever it wants. But if the jobs numbers are like terrible, like they were back in July, and the market reacted to that late July and August, I just think that's one way to kind of put the market on its heels. And then earnings season just starts to kick off. And so it's going to be another interesting time where it's like, is the market saved by Mag 7 earnings? Is it saved by semiconductors? Is it saved by Mag 7? Is it saved by AI? Is it saved by other companies? Is it a broader market earnings season that's actually healthy? Like a Walmart, like a Coca-Cola, like a financials. I mean, are financials looking better? Are like JP Morgan, when they said that we overestimated like earnings for 2025 and all of a sudden they dropped 7.5% in a day. It's like, I don't know. So I just don't see the market having the justification to go 10% higher. So I'm not buying it. Like, if it drifts higher, dude, great. That's easy. I'll just protect profit. Like, I comb through my portfolio when it goes higher. But I'm letting things that have been set in motion stay in motion. And then if things are going to go bad, I want to make sure that I'm protecting to the downside. So if it goes up, that's the pleasant, cautiously optimistic bull. That's like, it just melts up and we make a lot of money that way. But I am going to make sure that I'm pretty protected to the downside. And, we're sitting here again. Now we've got about 20 or 25 minutes worth of selling, and the market has broken that low from yesterday's intraday price. And we've got a solid like 2 candles that are making a break for it. So we might have like a 1% down day on the S&P. We have a long ways to go. I mean, if the SPX goes all the way down to the FOMC close, I mean, that's another 60 points lower, dude. So, I mean, it could happen, right? The VIX, I mean, because it's like, maybe it's a slow, drifty sell-off. It's not like a gamma sell-off or anything, but it's definitely picking up some momentum here. Yeah, I mean,
I hope we can close the 614 or 5,600, 5,615. If we could close that today, that would be really nice. Is that what you were talking about with the FOMC?
Yeah, my
gap?
SPY. Yeah, my SPY level's right here. So my SPX, there's the FOMC low. Move this over here. So this is my FOMC low, and then here's my post FOMC high. So I'm looking at this as if this gap gets filled, you know, maybe the market stays here but struggles to break the high. But if we break through FOMC lows, that's a fake out, man. And I just think the market is potentially more volatile. So again, my summary is this. The market can go higher, and I'm not going to sit here and complain about it going higher. It's freaking awesome. If everyone's making money with the market going up, I'm happy. Everyone's happy. Nothing wrong with that. What I'm saying is I'm not excited about buying stuff fresh at all-time highs. I'm just not. So if I did some options
Why
and
not?
generate some income, why not? Is that what you're saying? Because I'm looking at where it's going. I mean, if I'm looking at where we're going, it's like, yeah, 20 to 25 to 30%. Like the average move, by the way, during an election year is about 22%. We're up there, dude. I mean, the average move during an election year is around 22% on the S&P. And if we go back to January of this year to where we had the highs, I want to say that we stretched probably into a 20% level. I'm pretty sure we did. So let's start at this level here. We've gone up around 19.96%, give or take a couple decimal points there. But from the actual low of the year, right here, to the high that we saw on Thursday, the markets rallied 22.4% from bottom to top. Not saying that 22% has to be the top, but for an index, that's pretty good, right? Because the NASDAQ probably rallied 25 to 30% from the low to the high. And that's pretty good. And maybe a little bit of chop or indecision is fine. I'm just trying to be a little bit more opportunistic. Like if the market wants to offer us pullbacks, I'm happy to buy pullbacks. But I'm just managing. If it melts up, it melts up. And that's great. That makes my life pretty easy. That lets profits and all the positions I've built and accumulated over the last 9 months, it lets them all play out. If the broad market's going higher, I've spent months and months and months building positions for this type of move. So if we rally, great. All my work is paying dividends. But at the all-time highs, it's like I'm just not excited about this being the opportunistic thing where it's like I'm going to buy the highs. I don't want to. I'm going to try to wait for a pullback because I think we have employment news, which the market was clearly sensitive about. We still have inflation news, which the market can be sensitive about, even though it's ignoring it. Because I think that we've made this victory lap on inflation like it's never coming back. I think that's BS, dude. I think inflation is not going anywhere, and we'll be surprised by coming into like next year that inflation is going to be sticky at 2.5% or sticky near 3%, and the Fed is potentially going to break something with this whole idea that we're going to cut rates by 200 to 250 basis points, and the market loves it until inflation all of a sudden shows that, holy crap, we got another wave of inflation. It's back above 3% again. Now what happens?
Well,
the Fed backpedals and raises rates again?
I think if house costs come down and oil prices stay low and say the jobs market data isn't running rampant, like say it's cooling off or it stays steady, I think inflation could come down to 2. But
do you think house prices are coming down?
If we get a hot jobs market, like if the next NFP is incredible and unemployment rate comes back below 4, just seeing good jobs data, I feel like that's probably it's probably gonna inflate us a little bit, and then that's what you're talking about is the sticky inflation. Then the Fed might have broken something, but it's hard to predict what's going to happen. I mean, CPI came down 0.5%, 0.4%.
Yep.
That's a big drop in 1 month.
It is, but it's because oil dropped 20%. That was the big reason that inflation was lower. Is it was all energy prices. So, look, man, it's impossible. True, I agree, but it was shelter. It was shelter and energy. That was the two things that was creating the sticky. But here's my question: you said, if housing prices drop, you think anybody wants to drop their house prices? Do you people want to sell their homes for less right now when they thought that in 2022 and 2021 they could sell at these crazy highs? I mean, house prices probably aren't
I
coming
mean, I
down
think
unless
they
you can't
will.
move it on the market.
I saw housing sales went down a lot. So, I mean, I think,
Existing home sales went down
housing
because
costs
people
are going to have
can't
to
move
lower
their
them.
houses. Yeah, they can't move the homes right now. But I don't think people
Nobody
want to
wants to
cut. They
buy
don't
an
want to cut
expensive
their.
house right now.
But it's not the price of the house; it's the interest rate at 6.5% and 7%. People look. I bought a house that was 1,000 square foot bigger with a mortgage that was only $200 more a month. If interest rates are lower, people will buy a house that they want and they're willing to pay like more for it because with an interest rate that's super low, they can manage it. But interest rates high is why nothing's moving right now. So that's the next big, to me, that's the next big leg of real estate is that rates have to come down. I mean, the Fed just slashed by 50 basis points and the 30-year mortgage dropped by 0.05%. So the 30-year rate right now
Yeah.
is at
a lot of people.
6.09 from 6.2. How does that make any sense? It's clearly not moving, tick for tick with the Fed, and it's going to take time to get that into the system. But your 30-year average is 6.09, which is like the lowest we've seen since, I don't know, 2019 or some crap like that. No, that's not right. 2020 was like everything was getting dirt cheap. 2022 maybe. I guess I just look at the chart. 6.09 was when.
Here's
Last time we were there would have been 2023. Yeah, we're just a ways off. I think for housing
here's
to
one
recover,
last note.
rates have to keep coming down. What's up?
Sorry, it's like delayed. So every time I try to step in, it's like it comes in like 3 seconds later or something. But
That's okay.
when you were talking about mortgage rates, I was thinking this is the yield curve I have on my screen. We're at
Okay.
0.14 now. So we're continuing to rise. This is the the reversion or disinverted. I don't know what the terminology is,
Yeah,
but
that's right.
we are now back to normal levels and we're going higher, which is, I don't know, kind of concerning to me. This is like the number one recession indicator, right?
I agree.
The fact
Yep.
that it's above the neutral zone and it's continuing to climb since August 30th. Could be a month.
That's not good.
Within.
That's not good.
Yeah.
That's the bond, and that's the bond market
so
too, calling crap on the U.S. Like, and I found the correlation that the inverted yield curve has a lot to do with a tighter labor market, and the disinversion has a lot to do with a loose, softening, struggling labor market. And if we keep going higher in that 10 and 2, I don't think that's a good thing. So, I mean, the Fed can bring down rates. I mean, the 2-year right now is sitting at 3.63. The 10-year is 0.75. So you said like 0.14 inverted or disinverted. But yeah, the higher this goes coming out of that inverted yield curve, I don't think that's a good sign for anything. Now, it doesn't mean it's immediate, but man, I am like pretty skeptical after like end of year, maybe end of Q1, that this market faces like a pretty tough reality when things really stack up where it's like, okay, now they can't finally mask it. Now they can't talk through it. Now they can't jawbone it. It's like the Fed might cut so aggressively that they fudge it up and inflation's still a sticky and the labor market isn't recovering. Dude, is cutting rates going to save the labor market right now? Not necessarily. There's nothing about rate cuts that can save the labor market as far as actual employment, average hourly earnings. It doesn't save the labor market. It might help fend it off. It might help, curb it a little bit or slow it. But for the Fed to say yesterday or on Wednesday that their expectation by the end of the year is that labor unemployment or unemployment rate is going to be 4.4. You're trying to say that over the next October, November, December non-farm payrolls that we're going to have a 1/10 of 1% increase, and that's it. That's a gutsy play if you ask me. So I feel like Steve Carell in The Big Short when he stands up and he's like there's a 0% chance that the rate of the risk of that is that's what I feel like right now. It's like the Fed can't say that with any certainty that the market's going to be barely budging with unemployment. Things are getting that much better just because they decided to cut rates. And the reality is too, cutting rates by 50 basis points is and they massaged the message on Wednesday, but clearly that cut was to get ahead of whatever they think is coming. Because if it's trying to fend off and curb the softening of the labor market, maybe it helps. But does it fix it? I don't know. That's the tough part. So I keep looking at this, and I said if we're gonna have like a rip higher, I almost want to see this get inverted again. That's what I'd like to see. And so employment data might do that. Maybe it doesn't. But if this keeps going higher and higher and higher, I'm definitely getting more and more cautious. Not saying bearish, but I'm just saying cautious. So
we cut by 50, which is more than what we expected at first. So I think short-term rates are going to be highly affected. So I think that's why the 10-year isn't dropping as hard. I mean, they move slower anyways, but I think if we do, like you said, cut aggressively, it might keep that that curve or that chart we're looking at moving higher. It might not go back below zero.
Yeah. So the watch tool as well. So they're looking for a 25 and then a 50. So we're still looking for and this I've seen arguments for just 25, 25. We were wondering, if they're going to cut it all in November because it's right after the election. So right now the market's anticipating a 25 basis points cut with the highest probability in November. That's 2 days after the election. And then in December, highest probability is a 50 basis points cut. So that would be 1.25% cuts from September to December. Like, that is the Fed.
I mean, the Fed shouldn't have cut at all, but
you're not wrong. But this is why we talked about this, saying that the Fed cut was actually more of a consumer cut. And a lot of people are arguing that's a political move. It's like, whether it is or not, I think the Fed needed to do something, or else it was going to break. The economy was going to break at some point. Like, you can't have you can't have housing prices this high. You can't have crap this expensive. You can't have people that are stretched with no savings whatsoever, basically financing lifestyles on debt and credit cards. That's not a good thing. Delinquencies are up, repos are up. Like, the consumer is definitely getting pinched. Now, to argue and say, well, household wealth is as high as it's ever been, right? Because house prices have inflated by 50+%.
Yeah.
So the only way you have money is because your home prices have gone up, 50% or more since COVID. I know markets that are up 100+%. Since people bought a home in 2020, it's 100% on paper. Have they sold it? Have they sold at the highs yet? No. So if somebody bought a house for $500,000 that's appraising for $1 million, are they selling it? No. But on paper, they might take out a line of credit. They might take out $100,000 and say, okay, well, I'll borrow against it, but pay what? Borrow it at 6-7%? That sucks, man. Like, you got to be a pretty good investor if you're going to make that money back and say, well, I make enough money to cover the cost of that line of credit. I'm not interested. So I don't know, man. It's like I said, I'm not trying to sit here and paint this doom and gloom picture, because that's what everybody's wrong. It's like everyone that's trying to be crazy bearish. I'm not that person. I'm just cautious, and I think there's good measure to be cautious, because we've seen the market be sensitive a lot since August.
Yeah. There's a lot of reasons to be cautious. I wouldn't say bearish, but like what we've been doing the past couple months is hedging.
Yep, agree.
Just do that. I'll
keep
prepare
doing
for the worst, because it could happen. But I feel like this market is unstoppable.
I mean, I hope it is, because the easiest trade in the world would be for us to be sitting here like cautious, but not necessarily over hedging and taking a bearish direction, and watch the market just blow the top off and be crazy capitulation, and the pain trade remains super high. But we benefit from that. Like, my portfolio is still long. Like, I'm tilted bullish on everything. And like I said, this allows me to have like the broader market. Great. Broader market bulls. I make a lot of money, and that's fine. But I can't afford to watch like good profits turn to, break evens when all of a sudden the market decides to drop 5 or 10% just because it wants to. Like, I think the risk is piling up, where a bigger sell-off can catch everybody off guard. And that's what we never know what it's going to be. I mean, look, man, COVID, nobody knew that COVID was going to break the market in 2020. Nobody knew that a deleveraging in 2022 would break the market down 25 to 35%. And whatever the next big sell-off at 20 to 30 to 40 to 50% is, nobody's going to know what it is. It's called a black swan for a reason. It's called an outlier for a reason. Nobody knows what it is. But we've seen people for 4+ years since COVID calling the next breakdown, calling the next bear market, calling the next recession, and they've been dead wrong for 4 years. So we truly don't know what it is. But the reality is, if I'm playing to protect my portfolio, I can at least not lose my shirt when the market does, in fact, do something bad. So hopefully that helps. Like, it's necessary to have protection in your portfolio. It sucks to pay for it. It sucks to hedging isn't free typically, but it feels a lot better to have something when the market's down 10% and you're barely budging on your break. Your watermarks are right at the same levels, as opposed to market's down 10%, you're down 10% or worse because you're, highly levered and exposed. So I'm just trying to avoid that. That's this whole conversation. I'm just trying to avoid getting beat up when the market wants to, have a tantrum for a week or two. That's all.
Fair enough. Well, I think I've said all I wanted to say today.
Okay. All right. Well, 11:30 on a Friday. Let's. I guess we can wrap it up there. Frank, did you have a good week? As we sit here and we don't doom and gloom and opine doom and gloom too much, but did you have a good week?
Yeah, surprisingly, it was good. I sold the volatility on Wednesday, so that worked out well. And I haven't been doing much since. I've just been doing out of the money credit spreads on the call side. Yesterday was at 7:30, 57.30, I think, and it tested there. I got it for like $1.40, but it went up to like $2.70. I still made the $1.40 at the end of the day, but I was like, if I had waited longer, tested up here, I could have grabbed $240 for credit or $270 instead of $140. But
gotcha.
Just taking these intraday swings.
Sure.
I have one at what else? I have a $1.10 credit that I took yesterday. Actually, I think it's 710, 705. So
okay,
not the best price point, not the best entry, but it's looking good now. So hopefully it expires in profit. But that's all I got for today. Nothing crazy.
Okay. Well, let's wrap it up. Good so far. I mean, I had a great week. I've got a little strategy running right now that's 13 for 14 winners. Pretty happy with that. That's a nice little streak. Let's keep it going. Had some. I mean, I'm at high watermarks for the year, which was nice considering I had some exposure during that August 5th event and survived that and back up to highs and hopefully looking to finish the year strong, but a little cautious ahead, but for, I think, good rational reason, but doesn't mean anything. I can be completely pragmatic and rational. This market can do whatever it wants. And I think right now it's probably irrationally higher than it is irrationally lower, which is totally fine. So I'm just trying to make sure I'm not caught off guard by some downward move and let the market melt up all that it wants, because by the end of the year, that could be great. So that's pretty much where I'm at right now. And there's plenty more trading ahead. So stay tuned for more. Enjoy your Friday, Frank. Enjoy your Friday and weekend, everybody. And we'll be back next week.
You too.
Cool.
Thank you.
All right. Thanks. See you, everybody.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.